When you think of a water utility company, you probably think slow, steady, maybe even a little boring. So how does one suddenly have its best year ever and turn into a high-yield machine? Well, today, we're cracking open the books on the record-breaking 2025 performance of Maynilad Water Services.
Okay, so here's the game plan for breaking this all down. First, we're going to look at how Maynilad morphed into this thing called a high-yield defensive stock. Then, we'll dive right into the jaw-dropping numbers from 2025. After that, we'll unpack the two-part engine that was driving all that growth, see how they paid back their shareholders in a big way, and finally, look at their massive plans for the future. Let's get into it.
The company itself called 2025 its best year yet. That's a pretty bold claim, right? But honestly, when you see the numbers we're about to go through, you'll see it's not an exaggeration at all.
So what's the big deal here? Well, essentially, Maynilad kind of transformed itself. It's now what investors would call a high-yield defensive stock. And what that means is it's seen as a really stable, safe investment that also gives you strong returns. And trust me, that's a pretty rare combo, especially when markets get choppy.
And really, the starting gun for this whole new chapter was their successful IPO, their initial public offering, back in November of 2025. That one event really set the company on this super clear growth path that we're seeing play out right now.
All right, let's get to the good stuff. Let's look at the numbers behind this best year ever, because this is where the story really gets wild.
Okay, what's so fascinating here is the acceleration. It's like a snowball effect. So revenue grew by almost 10%, which is really solid, right? But that growth just got stronger as it went down the line. EBITDA, which is basically a way to measure a company's core profitability, jumped to almost 15%. And then by the time you get to net income, the final bottom line profit, it shot up a massive 19%. This is a perfect example of what they call a strong earnings upcycle.
And for those of you who love the nitty-gritty details, here are the raw numbers. We are talking 36.6 billion pesos in revenue, which turned into an incredible 15.2 billion in net income. But you'll see another line item here that is absolutely key to this whole story, adjusted net income, which also saw a huge leap.
So what on earth is that? Well, adjusted net income is a super important metric for a company like Maynilad, which has all this huge physical infrastructure. It basically shows you their true cash-generating power. It does that by adding back expenses that aren't actually cash leaving the building, like the value of equipment wearing down over time. It just gives a much clearer picture of the actual cash they have to work with.
So how do they pull this off? A performance like this doesn't just happen by accident. We got to pop the hood and look at the two-part engine that was powering this incredible growth.
Yeah, that's the key question, isn't it? How in the world did they manage to boost their profits so dramatically? Well, the answer is surprisingly simple.
It pretty much boils down to these two things. First, they started getting paid more for their services through approved rate changes. And second, they got way, way better at their job by cutting down on waste. Simple as that.
Okay, so the first driver was all about the rates. Manila put an 8% basic rate adjustment into effect at the beginning of the year, and they also bumped up the environmental charge on customer bills. These were regulated changes, so they gave an immediate, direct boost straight to the top line.
Now, the second driver is all about efficiency, and honestly, this number just says it all. 256 million liters. That is the mind-boggling amount of water that Maynilad recovered every single day last year. Water that before was just leaking into the ground instead of making it to people's homes and businesses.
That lost water actually has a technical name. It's called non-revenue water, or NRW. Just think of it as leaks in the system. So, by aggressively going out, fixing pipes, and plugging those leaks, Maynilad didn't just save water, they slashed their operating costs, and all those savings flowed straight to the bottom line.
So the company has this fantastic year. That's great for them. But what does it mean for the people who actually own a piece of it? The shareholders? Well, let's talk about the direct rewards.
Look at that number. That is the total amount Maynilad paid out to its investors back in March of 2026. A massive 8.44 billion pesos. A number that big signals huge confidence from the top brass about the company's financial health.
And this chart really just perfectly illustrates the company's balancing act. Of all their available cash, that adjusted net income we talked about, they paid out about 42% of it directly to shareholders. The rest, the majority at 58%, they kept in the company to fuel future growth.
Now, what's really important to see here is how strong and confident this payout was. Their official policy says they have to pay out at least 40% of their adjusted net income. Well, they paid out 42%.
It shows they weren't just scraping by to meet their commitment. They had the financial strength to exceed it.
And that brings us to the future. Because this isn't just a story about one amazing year, it's about how that year sets the stage for everything that comes next. It really is all about that balance between rewarding your investors today and building for a stronger tomorrow.
And if you thought that $8.4 billion dividend was a big number, just get ready for this. Their planned capital expenditure, or CapEx, for 2026 is 30 billion pesos. That is more than 3 times what they just paid out to shareholders. All of that is going right back into future-proofing Manila's entire water system.
This timeline really shows the incredible momentum they have right now. You can just see this rapid-fire series of events. A successful IPO, then boom, the approval and payment of a massive dividend, and then immediately pivoting to an even bigger year of investment ahead.
And that 30 billion, it isn't just some number on a spreadsheet. It's a real blueprint for a more resilient water infrastructure. It's already earmarked for huge projects like new water reclamation facilities and, of course, a lot more of that crucial pipe replacement to keep driving that efficiency up. They've also hinted they might raise even more money through bonds or loans to get it all done.
So, you might be asking, how can they be so confident about all this? How can they plan so far ahead? Well, it comes down to their agreement with the government. This revised concession agreement basically guarantees them a stable, predictable 12% return on all the money they invest in their infrastructure. This is the bedrock, the foundation that makes them such a defensive play for investors. Which really leaves us with a final thought here. Maynilad is pulling off this delicate and frankly impressive balancing act. They're rewarding their shareholders generously, while at the same time pouring record-breaking sums back into their own future. So you have to wonder, is this blend of high yield and massive reinvestment, all of it backed by regulatory stability? Is this the new blueprint for what a modern utility stock should be?